if the member really wants to take out on account 3, make sure that they are always able to generate above 5% return, put into something that can generate 5% return. Because if not, might as well just like
put it back there.
Put it back to account.
Welcome back to the second episode of Duit Talks. My name is Priscilla from Mula Advisory, and we have over here today Louis from Malacca Securities, Head of Research.
Hi everyone, I'm Louis and nice to see you again.
Okay, so for today, right now it's already 25th of April. So these days, the common topic among Malaysians would be the EPF Account 3, whether it is a good idea or not. But at the current moment, we don't have any firm up details at the moment. So what do you think about the government initiative to have this Account 3?
I think EPF Account 3 would be good for those that is in need of money, so they can actually, sort of like have a good convenience to take out money just in case that for emergency.
I see.
So in that note, I believe that it is a good initiative for those that need money. But for those that want to really save up money, I think they want to really put everything account 3 into account 1 or account 2. So to do a forced savings, and especially when EPF is for retirement funds, I believe that is the whole objective of the EPF.
I think when it comes to treating account 3 as the emergency fund, right? The thing that we need to always understand is that what is the return that they're going to give to us? Is it going to be 5 to 6% similarly with EPF account? Which I doubt so. I don't know.
I think it's a bit tough. In investment point of view, when you have this EPF account 3 itself, EPF will be having a very messy operations in terms of 75% in account 1, then the 15% in account 2, then 10% in account 3. So which means that if a lot of people are withdrawing or from this account 3, how would EPF manage the 90% of the money? So it will be hard for them to just use the 90% of the money and invest and give you the whole return for the 100% of the money. So I think in that point, I would say that operation-wise, it will be quite tough for EPF. I'm not too sure. What do you think about this EPF account 3, Priscilla?
I mean, I don't think they will be able to give you pretty good returns. Okay. I think my view would be either very, very low returns, or maybe they're only able to give you like 3% sort of returns. Because I would think that in terms of investment, you are allowing Malaysians to withdraw it anytime, correct? So long it's minimum 50 ringgit. So when you can withdraw anytime, that would mean to say they are not able to lock into EPF, are not able to lock into some certain investments with a longer term of investments and also with a better yield in that sense. So I would think that if EPF account 3, they don't give any sort of interest, okay, you should consider, and you really need it for emergency sake, okay, you should take this money and to park it elsewhere that is able to give you, let's say, your 3 to 4% returns. So that could be some of your money market funds, or even on your flexi loan. Okay, flexi loan, certain people have 4.1% or 4.5%. You put your money as an advance payment there, you reduce the interest, then the principal, your principal lower down
Correct.
You can still take it up that time. But if really zero return, you should consider, and you don't need the emergency fund, park it back to account 1 and account 2.
Yep, correct. I think it's quite tough for people to envision what sort of returns that they are getting for now. But as long as make sure that they are always able to generate above 5% return, put into something that can generate 5% return. Because if not, might as well just
put it back there.
Put it back to account 1 and account 2.
If assuming that you want to get higher returns, like what Louis say, is that you can consider perhaps buying certain ETF or even mutual funds for longer term. But the thing here is that Malaysians, right, do not exactly have the discipline for long-term investing. Usually what we always promote is, or even a strong believer in, people always say buy low, sell high. But Malaysians always buy high, sell low.
Why is it different in that way? I mean, sometimes when we want to buy into certain investment or certain asset classes, when you buy into it, you expect that uptrend would sustain.
Yes.
But again,
But the thing is that you have to understand, like everyone have to understand, is that when it comes to investment, if you want to have shorter term of growth or shorter term periods of returns, then you should go for something much more expected, more predictable. You don't go and take your money, go into cryptocurrency. Few years ago, cryptocurrency, people say it is a very bad one, it will go to zero. And then people start to sell. But now, people 60,000 US dollar, then they go and chase after the high.
Yeah.
Then after that, get impacted again.
Yeah. But I think Bitcoin, we can have another session, because right now we have the Bitcoin halving, and perhaps that may sustain the Bitcoin higher. But I think on all these very risky assets, I think based on my personal experience, I would just put about 5% of your total portfolio into that. I wouldn't put more. I wouldn't risk more into all this cryptocurrency
alternative investment.
Yeah, exactly. Because in this scenario, they only can give you capital appreciation, but you can't grow with the Bitcoin itself. For instance, if you buy into a company like Apple or whatever, Maybank, and that will actually continue to grow higher and higher. So that would generate more capital appreciation and also dividends. So I would say that if you buy into something, into a company, I think that is more worthwhile to look into that.
I mean, since you're in this topic, right?
Yeah.
The recent topic, very hot topic, would be gold investment.
Yes,
okay.
Certainly.
So what do you think about gold investment? It's like going all-time high with a very short term of period. Like this year alone, year to date, what's the return like?
Okay, so this year alone, I think year to date is about 10 to 12%.
Oh.
And the highest point was about 2,000 plus, 2240 if I'm not mistaken. So all in all, I would say that it boils down to the uncertainty that we are having. We have a higher geopolitical tension, and all this has been affecting the market sentiment. And people that not to say people, but central bankers that are actually looking into protecting their currencies is actually buying into gold as well. So which means that because US dollar is actually on the more strengthening path, they want to protect they want to store their wealth, and therefore they are going into gold. So I would say that gold, it's all it's always good, but again, gold will not give you another mini gold out. So it's not providing you dividends.
Yes.
So it is only able to store your wealth, and also it's an inflation hedge kind of asset class.
And also these days, a lot of participants or even one of my clients is like saying that should I actually invest gold? Okay?
What is your view?
So my view is that it is considered one of the commodity.
Yes.
In that sense, is that you should put maximum maybe about 10% of your exposure, investment allocation to commodity, because you can't expect it to have like this short-term gain. It will not last long. It's a momentary thing because of the current crisis and all. And if you were to look at it, right, in 1980s, if you were to look at gold price, there is a period of time if you hold gold for 20 years.
20 years.
The price did not change much.
Oh, okay. Meaning to say that during that period, it just fluctuated below that range.
Very similar range.
Okay.
So in that sense, it is rare to see, to witness an asset that if you hold 20 years, also not much changes, So in that sense, you should not treat this as like, a capital appreciation in that sense. It's more like a hedging, like inflation, like what you say.
I think inflation hedge would be a very correct way to view gold as asset classes. So I think based on the current structure, as inflation is going higher and higher, if you want to store your wealth, if you don't store your wealth into gold, your money today will be lesser than yesterday, right? So in order to battle against the inflation, I think one of the ways is definitely gold. But if not, then you can actually buy into maybe gold ETF.
Gold ETF.
It's easier because I think just now we have
easier than physical gold.
Correct.
Because you have physical gold, you want to buy gold bar. Yes, gold bar. But then where are you going to store it? At home? Then if you buy already, then people follow you home.
Yeah, exactly. So I think gold ETF is a good way to invest in gold because when you are buying into the gold ETF, you only hold the sort of like shares in the ETF, and the ETF issuer will actually put your gold bar into their vault. So basically, you don't have to get a vault to store your store your gold bar itself. So I think that is a good way to invest. But again, all these alternative investment asset classes, what is the view that how much that we should put in under this, how much percentage should we put under your total portfolio?
For commodity, it would be separate from alternative investment.
Oh, okay.
Because alternative, we treat it as like, for example, cryptocurrency,
right.
your P2P, your equity crowdfunding.
Right.
But commodity is like maybe your copper, your gold and all whatnot is 10% of your stable assets.
Right, okay.
But let's say we want to go buy gold. What is your recommendations of ETF? Which ticker should we go for?
Okay, there are two. One is a GLD, the other one is a GLDM. The main difference is about the expense ratio. So GLD itself,
0.4.
Yeah, 0.4%. GLDM is 0.1%. Also, the price of GLD and GLDM is
Big
different. So one is about $200 plus US dollar, one is about 45, 46 US dollar. So that is the more easier entry level.
Lower barrier of entry.
Lower barrier entry for GLDM. Yep.
Okay, I think that's about all for today's Duit Talk. It's going to be something very sweet and simple. Okay, so I look forward to seeing you in our episode 3 of Duit Talk. So today, signing off, my name is Priscilla.
My name is Louis. Thank you so much and see you again.